Hello and welcome to the first episode of Blockchains Explained. I'm your host Cosmo, and today we'll be talking about the original, the one and only, the first of its kind, Bitcoin. Bitcoin is digital gold. Now, a lot of people are saying this, but why are actually saying that Bitcoin is digital gold? Well, if we take a look at history, way back in the day, like we just used to trade goods for each other, right? Like I have a cow, I need some grain, I'm gonna trade my cow for some grain or for some fabric or from some cotton or whatever corn you people were needing at that time. So it was like a trade for trade, right? Then this kind of became a little hard, like maybe I don't want your thing, but I can trade it down the line and so on. So gold started to be the standard, right? People discovered gold. They're like, hey, this is a precious metal that's kind of rare out there, like we really like it, like, and it's easy to carry also. So like, hey, let's start using this gold, slowly. They basically started using gold and other precious metals, right? Then they minted these precious metals into coins. Coins are super important because they were kind of like official trading by a government, so like Julius Caesar, like he would mint his own coin, Alexander the Great, like he would mint his own coin, and like you would kind of like have these coins that were like, harder to fake by people because they couldn't get their hands on, like these sorts of machinery that would make the coins, and they were kind of to fake by people. Gold, like, I mean, people can melt it, they can put like other alloys in there to make it look like gold, but it's not like full of gold. So, like with minting tokens, with minting coins, it was actually harder, right? So then it was the era of coins. This actually lasted for like, a few millennia, and you had everything from like, gold coins, silver coins, copper coins, and a bunch of other types of coins in at the time, like civilized world, In other parts of the world, like people were still trading rocks or seashells or whatever. But it took a long time basically until we got to paper money. And then it took a not so long time until we got to plastic cards, which was basically like electronic money. And now we can just transfer money without even like using the card. And a new technology that basically came to rule them all is when cryptocurrency was invented. And Bitcoin is actually the first cryptocurrency. So the invention of Bitcoin itself basically sparked this craze of like, hey, we have all these other cryptocurrencies right now, and it's kind of like gold originally, when like gold is the primordial. It's like the standard basically of what it means, to have value. I mean, you have platinum and you have like some other types of metals, but like gold is pretty much the standard, and it's also like the standard when it comes to trading. Now, Bitcoin itself was actually invented in 2008 by this guy, Satoshi Nakamoto. Nobody knows who he is. He's a mysterious person, and that's actually one of the reasons why like people are into Bitcoin so much, because it's not ruled by any government. Since coins were basically invented, they had to have a government to basically tell them that, hey, this is legit. And then like then it got to dollars, and it got into bills that had all these things that were issued by governments or by central reserves, federal reserves, and so on. But Satoshi Nakamoto actually is a person that nobody knows, and there's a lot of speculations about it, but the idea is that nobody knows this thing, and like the network itself issues these tokens, right? It's a decentralized network. It first proposed the idea of this decentralized network where tokens are basically issued, and the network secures the tokens, because like now we put our faith into a government in order to secure the token, and in order to make sure that, hey, these bills are right, and then we put our faith into a bank in order to actually like keep hold of our money and give us the money and make sure that like, hey, and this includes a lot of regulation and restrictions as far as like what people can do with their money, how this money can be obtained. The government can start issuing a lot of money. Banks, like they just give people loans without actually having that money. And there's all this stuff about like, traditional money. Now, Satoshi actually described the technology behind Bitcoin where, these transactions can happen on the network, and they are secured by a decentralized network. So many people, like basically they keep hold of the transactions, and, everything is transparent. Everything is transparent on the blockchain. Everybody can see all of the transactions. And then everything is also immutable. So you cannot go back and change the transactions. So everything is out there on an open, decentralized ledger, which was like a revolutionary idea at the time. And it kind of like sparked this craze. He posted this white paper like in December of 2008. He actually posted on some of these websites. It was a pretty simple concept, wrote in a very research style, but it was a pretty simple concept. And then in 2009, in January 2009, he actually minted the first block in the blockchain of Bitcoin. It's called blockchain because it is a series of blocks. So he minted the first block, and this actually, like started to create a network. More people started to run these nodes in order to secure the network, in order, to mine these Bitcoin, which, Bitcoin is basically mined. It's like an operation where, like, there's like a computation that basically needs to happen. It's called a hash, and it basically needs. So Bitcoin is basically mined to like some algorithms, through some like mathematical calculations, and that's how the network is secured. Like there's these calculations are actually hard to make, and that's why the network is like secured, because in order to mint the next block, you have to do all of these calculations, and that's why it's like that. That's how Bitcoin is actually mined, by like making these calculations in order to create the blocks, in order to secure the network, in order to maintain all of this data that's basically needed. It's a subject that we're not necessarily going to dive in, but anyway, in 2009, the first Bitcoin block was mined, and then it started to get traction. Like originally it was a bunch of geeks out in like these geeky forums, and it was like this new thing that they're kind of trying, and like in 2010 it kind of started getting like super big popularity, and like there were a lot of Bitcoins that were actually mined at the time. And this guy, he actually made the first real life, like real world Bitcoin payment with Bitcoin. He paid 10,000 Bitcoins for two large pepperoni pizzas. 10,000 Bitcoin for two large pepperoni pizzas. That basically means that Bitcoin at the time was like 0.0025 cents. So like less than a penny per Bitcoin. And we know right now, the time that I'm recording, Bitcoin is somewhere around like $67,000, right? Then, like a few years later, like Bitcoin reached market cap of $1 billion, and, so on. The network started to develop, like we hit the bull market, like the more chains started to be developed, and there's a lot of stuff that basically started to happen within the ecosystem. But Bitcoin was basically like the original, right? Now the idea of Bitcoin is that Bitcoin is also a store of value, like gold. That's why it's super important, because gold itself, I mean, it does have some use cases, but it's more of a store of value because it appreciates over time, right? Like the gold supply in the world is somewhat limited. Like there's a little gold that's still being mined, but the supply itself is like, very limited, and most of it has already been discovered, and most of it is actually held by countries in their reserves, right, in their vaults, and like I forget what they're called, in the Federal Reserves, or like whatever they have, like I know that like the United States basically has like, about 30% of the world's gold in its vault, and then like all of these countries, they basically have um, keep gold in their vaults as a store of value, right? So countries actually trade kind of like gold, but it's not like, hey, I ship my gold from Romania, where I'm from, to America. It's more like, they say like, hey, I have, I don't know, 500 kilos of gold in your vault, right? And that's kind of like how they carry it. And anyway, the idea is that gold is more of like a store of value, and a lot of people invest in gold physically, to keep it like for generations. Traditionally, like it used to be, into like gold chains and like all of this, stuff. But now, it's less into that, and it's more into like, actual coins that people buy and sell. They have, and into like other, gold bars and so on. And it's more of a store of value, because it doesn't so much depreciate like the US dollar. There's not so much inflation, right? Like gold is pretty much appreciating, and Bitcoin is even more appreciative. Bitcoin is even more appreciative also because it has a very limited supply. So there's only 21 million Bitcoin I will ever exist, right? And then now it's like still being minted at the rate of like, I think 6.25 Bitcoin per hash block. So which is like a very small rate, back in the day, like already most of the Bitcoin has already been created. It's kind of like gold, like we already discovered most of the gold. There's still a little bit that we're making, but most of it is basically being discovered. And now it's basically being it's only appreciated. I mean, not only because you can still trade it, no financial advice here. Don't take everything that I say too literal. But the idea is that gold itself, that Bitcoin itself, like has greatly appreciated in value since 2010. When this guy paid like 10,000 Bitcoins for two pizzas. Right now, Bitcoin is at $67,000, and it's going to keep going up. That's why like all of the analysts are saying that eventually, like Bitcoin is going to keep appreciating because of this limited supply and because of how, like people are starting to use it as a store of value, and there's actually like very little Bitcoin in circulation. Like there's not a lot of Bitcoin to go around, and people are trading this heavily, but they're not even trading the Bitcoin itself. Like they're using it on centralized exchanges, that they don't even hold their Bitcoin themselves. Like, hey, I go to some person and it's like, I'll give you some Bitcoin, you give me some Bitcoin. It's more used of like, a store of value, and it's being traded on the crypto market like gold is being traded on the stock market, right? When you go to the stock market, you don't actually like, get a piece of gold. You just trade the stock of gold. And that's kind of like what happens with Bitcoin on centralized exchanges. And the idea is that most analysts are basically saying that Bitcoin is going to continue to appreciate. And we can basically see this here in the price of Bitcoin, right? Like in 2010, it was, like 10 cents, um, something like this. And then it started to gain traction until the first kind of like bull market, when it spiked to like $1,200, back in like 2013, 2014. Then it went back down, and it started going back up until it hit, like almost $20,000 in like 2018, 2019. That's actually when I got into Bitcoin, right? And I think it was the winter of like 2017 or 2018. Just before Christmas, actually, like I was here when the price of Bitcoin basically went from like $10,000 to $20,000 in like 2 days, which was like crazy. I put $1,000 into Bitcoin, and I'm like, oh my god, I doubled my money literally overnight. Now I didn't sell at the top because I thought it was gonna go higher, but I saw kind of like the power of blockchain. Then it went again into like a bear market, how we call it, and it spiked again in the bull of like 2021, 2022. When it got to actually, like, the idea was to get to like 69,420. That's where the people are kind of like aimed to get it to this meme number. But there's different accounts of what the price actually went to. Then it went back into a bear market. We can start noticing the cycle of bull market, bear market, bull market, bear market, bull market, bear market. The where it hit a low of like $18,000, and then it went back up, until it reached like $73,000 in March, which is unusually faster than the rest of the bull markets used to be, because of these Bitcoin ETFs. Like the institutional investors actually started coming in, Wall Street started coming in, and that's why I started to preach this narrative that Bitcoin is institution is like digital gold and so on. And Bitcoin is also the crypto market indicator, right? Most of the crypto market basically revolves around Bitcoin, right? It's kind of like the S&P 500 of the blockchain space, right? If Bitcoin is up, most of these other cryptocurrencies are up. And if Bitcoin is down, most of these other cryptocurrencies are down. So like when you look at the market, don't be surprised if most of the time, like you'll basically see like, hey, either most of the coins going up or most of the coins going down. So it's very important to understand that Bitcoin is the market indicator. So a lot of people, when they make the technical analysis, they make the technical analysis on on Bitcoin, and then they relate all of this technical analysis that they make onto Bitcoin. They relate it to like other cryptocurrencies to kind of like see it. Now, not all of them follow on par. That's why like there's a lot of like BTC to other token charts that you can look at. So there are some fluctuations, but in general, the market basically follows Bitcoin. And Bitcoin is actually more than just money. Like we were saying before, you can have the Bitcoins, which are like the store of value. But Bitcoin itself was actually made for transactions, right? The original idea was to actually transact these tokens anywhere in the world, basically, without the government intervening, without a bank intervening, right? I mean, if you try right now to send $1 million from America to the UK, right, the bank is going to call you and ask you like, hey, why do you want this, like, like it's going to ask you all of this information and stuff like that. Where do you have the money and blah blah blah. It's also going to take probably like a week or two, right, until it goes cross border. All of these banks have to clear it. Probably goes to like 3 different banks. It costs a bunch of money and so on, right? So the idea with Bitcoin was to have these transactions, right? So that is like the primordial utility for Bitcoin, to transact borderless at any time, right? Like within minutes, your payment, your transfer is like anywhere else in the world, with nobody asking questions, right? You pay the fee to send the transactions. You put the wallet address where basically like this transaction is going, and boom, within minutes it's basically there, right? Unheard of at the time, like unheard of, right? It doesn't take a week. Nobody's asking questions. Just like boom, boom, easy peasy, lemon squeezy. So the primordial use for Bitcoin is actually to have transactions, the same way how kind of like the primordial use for gold is jewelry, right? Like the primordial use for day-to-day people, right? You can use it as a store of value, right, and have the coins or have the 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 gold bars. But most people actually have gold as jewelry, right? Whether it's a chain, whether it's some earrings, whether it's like whatever other piece of jewelry, rings, and so on that they have. So yeah, jewelry, and then it goes even deeper as technology started to come up. They're like, hey, we can actually use gold in this technology, right? If you're familiar, like in processors, there is, like in CPUs, processing units, there is a lot of gold in, like, these small electronics, because gold turns out that it has some very special properties. It's a special kind of conductor of electricity. So gold is actually very good in engineering. It has some other use cases, right? And then recently, very recently, people started to inscribe other things in the blockchain transactions, right? So this new paradigm sparked of like orders, right, which are like a type of a protocol that is inscribed in Bitcoin. Bitcoin was not originally made for that, right? The same way how like gold was not originally made for to put into technology. We haven't discovered this yet, but developers kind of discovered ways in order to make the blockchain useful not only for transactions but also for some very niche things that are technology driven. And of course, Bitcoin is for the culture, shout out to all the Bitcoin people out there. It represents the avant-garde. It represents like the kind of like, originally it was like the going against the grain, the exiting the matrix, the kind of like anarchy, like I don't listen to any government, and like I'm making my Bitcoin, I'm mining Bitcoin, I'm like I'm paying people, I'm kind of like outside of society. It's kind of like this thing where like, hey, we're not really okay with how the monetary system and the financial system works right now. So like we want Bitcoin to basically be how we handle everything, all transparent, all decentralized, all of these things, that we're doing it for the culture. And this actually sparked the crypto culture, and a lot of the people in the crypto culture, they follow kind of like similar principles. But Bitcoin itself is kind of like its own niche into this, right? You have the Bitcoin maxis, and now you have the Bitcoin ETFs, which are basically the future, which is kind of like what actually sparked this last peak, of like 73,000, when like Bitcoin ETFs got announced. And this basically means that the Wall Street started to use Bitcoin, that the Wall Street basically started to sell Bitcoin, and that people can start investing into Bitcoin through traditional means, right? They don't have to create a wallet, they don't have to go to an exchange, they don't have to go to do any of these things, right? Like, they can just buy the Bitcoin ETF, which basically, and the ETF will go and buy Bitcoin for you, and you can basically like get this exposure from traditional institutional investors much easier into the Bitcoin market, which basically means that there's more liquidity coming into the Bitcoin market, which in turn basically means that, hey, over time Bitcoin is going to appreciate, right? So Bitcoin is a long-term play. It's not something that can grow, super fast overnight. I mean, it can do the 2x's, the 3x's still. We saw like even in the last bull market, like in from the $18,000 bottom of the last bear market, it went to like 73,000, right? That's almost a 5x within a very short period of time. So that's still like a massive potential. But ideally, most of the people that are buying Bitcoin, they are actually buying it for a long-term gain, because it's going to be, people are saying, worth millions of dollars in a few years. So that's kind of like the long-term play of Bitcoin, or you can trade it, because the Bitcoin chart is actually like has the most history and has the most liquidity that's being traded through it. It's kind of like the market indicator, so the fluctuations are kind of like easily predictable. You can predict all the resistance, support, and stuff like that. But if you're watching this video, you're probably not like thinking so much about trading. It's more understanding that like, hey, Bitcoin is why Bitcoin is digital gold, why is it so cool, and why it's usually people say that it's a good long-term investment. Now, I'm not a financial advisor. Don't take everything that I'm basically saying as financial advice. This is more to give you a basic understanding of Bitcoin. So then you start understanding the crypto market. And I'm very grateful for you hanging out with me so long. If you like this video, please like it. If you want to continue seeing some of these videos, subscribe. It's free. And also free is our Telegram group where we discuss more of these cryptos, where we give some more crypto info, when you can meet with a bunch of cool people that are all doing crypto stuff. You can talk about the market, you can talk about a bunch of things, and if you have questions, comment your questions below. We're going to continue to do a bunch of these videos to explain to you some of these concepts. You would follow us if you would join our group, comment, and I will see you in the next one. Peace and happy trading.